Good morning. It's Jeffrey Christian of CPM Group. We're recording this around 10:20 on Thursday, the 25th of April, for a release in the morning of the 26th of April. I'll be out of the office tomorrow, so I'm recording this today. At the end, I hope to talk a little bit about gold and silver markets, updating what's been going on since the beginning of the year. But I want to start and spend some time today talking about the Treasury's Gold. I did a video on Tuesday about that, and from the comments, I can see that I should have been more articulate and more detailed so that people could maybe learn a little bit more and understand more. I want to start with one comment. I am very respectful of people who have opinions other than mine that are based on intelligence and knowledge and can be defended. I revel in those kinds of discussions. I don't revel in discussions with people who demonstrate irresponsible and irrational beliefs. Neil deGrasse Tyson, I saw an interview with him a few years ago, and he said, I just don't want to debate those types of people, and nor do I. Furthermore, there's an issue of respecting people with different opinions. I respect people who have opinions other than mine, different, counter to mine, if those opinions are intellectually supportable. If somebody, for an example, somebody believes in Pizzagate, and there's a pedophile group in a basement of a pizzeria, a specific pizzeria, and that pizzeria doesn't, in fact, even have a basement, that person has a responsibility to society to correct his or her errors when they are made obvious and apparent, not to find further justifications for believing something that clearly isn't true. Similarly, society has a responsibility to point out such misinformation and a refusal to acknowledge reality. Goes on in the precious metals markets, but it goes on across the economy, across politics, across society. We give interviews to people who, if you look at their websites and what they post, they're mostly promoting people who espouse, dishonest and irresponsible and unsupportable views. Those websites, those people that interview those guys and put this up, 90%, 99% of what they post is just gibberish from people who have been consistently wrong their entire careers. Those websites are not seeking honesty. They're not seeking to put information out to people who need it. They're seeking clicks and cash. In 2022, I got to spend about 3.5 hours with Jim Lewis, who was running the Wall Street Silver thing in Vancouver. And it was very interesting because we were both very honest with each other. And he said, I don't care if everybody who listens to Wall Street Silver loses money. I don't care if everything that I put up there is wrong. I don't want to know the truth about silver. All I care about is getting numbers of subscribers, because then I can charge my sponsors more. It's not the kind of life I want to lead, and these people are pushers. They're pushing misinformation. They're not providing information. I came up with a really good term for it this week: digital toilet paper. Now, on to something substantial, because I've already squandered 4 minutes of our time. These were two comments from Tuesday's thing. The first one, and I highlighted the important one, based on the inability to deliver foreign gold upon request, makes you suspicious of the US Treasury's honesty in accounting for its gold. And the lack of a transparent third-party verification hurts the credibility. Then this other guy is saying it's respectful that, the Germans couldn't get their gold. Well, both of those views are wrong. And not only are they wrong, they are patently wrong, and they are readily, verifiably wrong based on information that's readily apparent on the internet. Transparent third-party verification happens every year with the Treasury. And you can go to USTreasury.gov. You can get those reports I showed you, and you can see the name of the auditor. Don't ask me to do that for you. Get off your tush and do that. Okay? Second thing is the Germans did not have any delay from the U.S. Treasury or the Fed saying you can't have your gold back for 7 years. That was a lie. You could call it a myth if you want to be nice, but it was a lie, and it was there. The delays, insofar as they were delays, was that the gold that the German government had in London, New York, and Paris actually was not good delivery gold. A lot of it was 90% gold. It was old gold coins. This was gold that was collected by the Bundesbank in the period from 1950 to 1971. Good delivery standards were upgraded in 1979, 1980. That gold was not good delivery. The Bundesbank said, okay, we want to transfer gold from New York, London, and Paris to Frankfurt. And we want good delivery gold. So we're going to have that gold upgraded or swapped into good delivery gold before we bring it into Frankfurt. And that's what took time to do because it was a lot of gold and it was backed up. Now, the head of that program at the Bundesbank spoke at CPM Group's 2015 Gold Yearbook briefing, which we held at one of Bloomberg's offices here in New York, and we posted it on the internet in 2015. He explained why the Bundesbank was doing it, why the Bundesbank and most of the German government in 2015 did not want to do it, but they were kowtowing to neo-Nazis who had taken over a portion of the Bundestag, the parliament in Germany. They explained how they liked to have their gold in New York because, quite frankly, New York was as far away from Russia as you could have it. In 2015, he gave a really good talk. There's the link to our presentation. The presentation was like an hour and a half because we spoke about the Gold Yearbook. He spoke about the Bundesbank's moving to gold. Then we had Chantal Schreiben, who was from Morabiel and Company, talk about their work in the gold research area. It's been there on the internet since 2015. If you haven't seen it, that's your fault. It's not the world's fault, right? The information is out there. It's a tool to be used. If you don't want to pick up that tool and use it, you can't. You don't have to, all right? So first off, the comments that Germany couldn't get its gold, that the Treasury or the Fed refused to give it and said, oh, we need to have 7 years to do it back, that was all nonsense. Right? Second thing is this comment about leasing gold. Yeah. I don't know anybody anywhere in the world, and I've been involved in gold leases since the early 1980s. I have never seen anyone lease gold in from someone else and let that someone else retain control of the gold. If you want to lease your gold out or do a gold dollar swap or gold other currency swap, you have to put that gold someplace where you don't have control of it and the borrower can claim it if something goes wrong. Yeah, that's true of all leases. It's true of central bank leases. You know, this is a chart showing the amount of foreign gold held at the New York Fed. This is gold held for governments other than the United States at the New York Fed. And you can see back in the mid-1980s, about 340 million ounces of gold were held in the New York Fed for other governments. Beautiful, really cool depository. And yes, you can see it. Okay. By 2015, it was down below 200 million ounces. So about 140 million ounces of gold moved out of the Fed to someplace else. Why? People have often asked how much gold was being leased by central banks. And you can see, very importantly, most of it came out before 2000. Very little came out after 2000. And very little has come out since 2016. And actually, in the most recent year, 2023, a little bit rose. But thank you, Mr. Putin. People say, how much gold were central banks leasing? Well, it's about 130 million ounces, 140 million ounces. Some of it was being sold. Some of it was being leased. Some of it was being leased and then sold. All of it pretty much was pre-1971 and was being upgraded into good delivery bars before it was moved. A lot of it moved to the Bank of England. Why? Because the New York Fed would only hold gold for foreign governments back then. They couldn't even hold it for the U.S. government back then. That policy changed later. You couldn't be a private bank or trading company or anything other than a government or a central bank and have your gold at the New York Fed. The Bank of England didn't have those rules, and it would allow private entities to have accounts at the Bank of England where they could store their gold. If you wanted to lease your gold out, and a lot of central banks did back in the 80s and the 90s, if you wanted to lease your gold out, you couldn't do it if it was at the Fed. You could move it to another New York vault. Chase Bank had a vault across the street from the Fed, but they closed it because people just weren't using it. There was no money in vaulting gold in Lower Manhattan back in the 90s, I guess, when they closed it, or aughties. Mostly people moved it to the Bank of England. There you could lease it to people, to private banks, and earn an interest on it. And the private banks had a call on it. So you couldn't have that metal in your control. There were various news stories about the Venezuelan Banco Central de Venezuela moving its gold from London and a little bit from New York to Caracas when the Chavez and then the Maduro governments were up against the wall because they were being communists or socialists or whatever you wanted to call them. And they said, we're going to get our gold out of London. Why was it in London? Because they had been leasing it out. They took it to Venezuela, Caracas. They lost a lot of money. They needed to borrow money. They wanted to use that gold as collateral in a gold swap. They had to ship some back to New York or London in order to do that. Actually, most of the gold was shipped off to Africa, where it was melted down and recast so you couldn't see that it was actually the Venezuelan central bank's gold, and it was put into the private holdings of Mr. Chavez, Mr. Maduro, and some of their good socialist colleagues in Venezuela. So that gold just disappeared. The same way the Nicaraguan central bank gold mostly disappeared during the Somoza regime. So that when the Sandinistas took over, they said, we need money, maybe we should lend our gold or swap it out. And they found out there was only a ton of gold left. Gone on a little bit too long on this stuff. Bottom line, the Germans didn't have any problem getting the gold from the Fed or the Treasury. That's a lie. Call it a myth if you want to be euphemistic about it. But liars lie. Myth makers make myths. Analysts look for the truth. And you can't lease gold out and keep control of it. And if it's going to be some sort of super secret US Treasury leasing its gold out or selling its gold to China, whoever's leasing it in or buying it is definitely not going to leave it at Fort Knox. And if they don't leave it at Fort Knox, those seals are going to be broken on those vaults that have it, and it will be clear. So irrational people should stop being irrational. Let's talk a little bit about the market. Here are two charts, gold and silver, since the beginning of the year. You can see gold started at record levels, trading between $2,000 and $2,100 an ounce, And it traded in that level through January and February. The beginning of March, it started to rise, kind of plateaued for the last 3 weeks of March, and then it rose sharply to a new record. And then it's come off about $100. I think the price of gold right now is about $2,335. It had peaked at $2,400 and some odd dollars 2 weeks ago. So it's come off some, but it's still at record high levels. Similar pattern in silver, although it's not at record intraday levels. Intraday level records for silver are $50, so it's dropped. But you did see it come up to $30 very briefly 2 weeks ago, and it's come back off it. And this morning it's testing $27 with the likelihood that it will fall below that. Who was buying? There have been all kinds of rumors. Oh, it's the People's Bank of China. Oh, it's Chinese individuals' demand. Who was buying was everyone. The demand that we've seen has been geographically dispersed. There's been strong demand for gold in China, in India, in other Asian countries, in the Middle East, in Europe, in North America, Canada, and the United States, and probably in other countries as well. Gold and silver, mostly gold. Silver's a little bit more specialized. You've seen less demand in Europe, more demand probably in the Middle East and various Asian countries. Who was selling? Well, people, you can see here, the gold price is rising, the silver price is rising. There are long-term investors and there are short-term investors. And then there are investors who weren't involved in gold and silver who saw the prices rising and jumped into the market. A lot of those people, because it's so easy, used ETFs to do their buying, and then they were able to liquidate them as soon as the price stalled out. Other people were hedging those positions. I'm worried about the state of the world. I'm going to continue to be worried about the state of the world. I want my some of my wealth in gold and silver, and I don't want to necessarily sell it, but let's be honest, the price of gold's risen something like 20 some odd percent in the last 2 months, month and a half. Silver's up 33% in the last 2 weeks. I think I'll take some profits. I want to hold my physical metals, so I'm just going to buy some puts, maybe pay for them with call spreads so I don't have to put up a premium. And price comes off $100, $130. I'll buy those puts, I'll sell those puts back, and I'll make $100 on the downside and still have my metal, physical metal. So who's been buying? It's been all over. It's been institutional investors, high net worth individuals, retail investors around the world. Who's been selling? Some of the same people. There's no one big whale. There's no one big central bank doing it. We're not even clear that central banks were participating in the purchases in early April. You won't really know that until early May, mid-May, and June to see who was actually buying and selling amongst central banks. But what we did see, and what is verifiable in the trade data that you've seen, is long-term and short-term investors around the world buying into these markets. What comes next? Our expectation is that we might have a little bit of a quiet period, rest of April, May, June, July, August even. But that when we get into those final 4 months of this year, you're probably going to see gold and silver prices rise further. That's all I have for now. Take care of yourself. Take care of those around you. Try to do something good for the world. And if you have a question about something, not doesn't have to be precious metals, try to find the good parts of the internet. And if something sounds unrealistic or it feeds into your fears, maybe what you've done is you wandered into a dark corner where the pushers are selling you things that will confirm your worst expectations of humanity as opposed to inform you about what's actually going on. Now, as Stephen Wolf said, God damn the pusher man. Have a good day. Take care of yourself. Have a good weekend.